Hi everyone and welcome back to my channel, The Money Blueprint. Today we're tackling a term you've probably heard a lot in crypto and stock markets, a bull run. My name is Michael and I'm your host today. In the next 10 minutes we're going to break down exactly what a bull run is, why it happens, and look at some clear examples that show how these market events work. Whether you're completely new to the idea or just looking for a simple refresher, this video is for you. Let's jump right in. So what exactly is a bull run? In everyday language, a bull run refers to a period where the prices of investments like stocks or cryptocurrencies keep rising. Think of it like a powerful surge of optimism, where buyers just can't get enough, pushing prices higher day after day. The term bull comes from the way bulls charge forward. Similarly, during a bull run, the market charges ahead with strong momentum and a positive vibe. It's that time when everyone's eager to buy because they believe the prices will continue to climb. A great example of a bull run is what we saw with Bitcoin in 2017. At the start of the year, Bitcoin was trading around $1,000. Over the year, enthusiasm built, and by the end of 2017, the price soared to almost $20,000. Another good example comes from the stock market. For instance, during certain periods, major stock indexes like the S&P 500 have experienced several months of steadily rising prices. In these times, investor confidence is high, and more people rush to invest in stocks, which further drives up prices. Alright, so both examples really illustrate how a bull run is driven by positive sentiment. It's like when more buyers enter the market, they push prices up. It's a fascinating process, isn't it? Now you might be wondering, why do bull runs happen? Well, there are a few simple reasons and they're actually quite interesting. First up, we have investor optimism. When investors believe that good things are on the horizon, whether it's a breakthrough technology, improved earnings, or some positive economic news, they get excited. And you know what? This excitement leads more people to buy, which in turn drives up the price. It's like a chain reaction of positivity. Second, we have the economic or technological catalyst. Imagine hearing news about a significant technology upgrade for a cryptocurrency, or a strong economic report for a country or market. Such news can trigger a bull run because it builds confidence in future growth. Third is momentum trading. Once prices start rising, more traders notice the trend. Seeing rising prices, they jump in hoping to ride the wave, and that influx of new investors further fuels the uptrend. All these factors together can create a self-reinforcing cycle that keeps prices climbing higher until something eventually causes the trend to slow or reverse. So let's look at how bull runs differ from normal growth. It's important to highlight how a bull run differs from regular everyday growth. Normal market growth tends to be steady and predictable. A bull run, on the other hand, is like a rocket taking off. Rapid, sometimes erratic, and driven largely by strong sentiment and media attention. This is why during a bull run, you might see headlines constantly talking about skyrocketing prices, success stories of early investors, and a general buzz that makes more people want to join in. However, because bull runs are propelled by high optimism, they don't always last forever, and the market may eventually slow down or correct itself. Bull runs can be exciting because they offer opportunities for significant gains. Many investors try to time the market and join during the early phase of a bull run. However, it's vital to keep a few things in mind. First is a risk of overexposure. Just because prices are soaring doesn't mean the rise will go on indefinitely. As an investor, you should be cautious, as a bull run could be followed by a correction or even a bear market, a period when prices fall. Secondly, do your homework. I cannot emphasize this enough. Even in a bullish environment, it is important to understand the fundamental reasons behind the price rise. Is it fueled by real economic or technological improvements, or is it just hype? And thirdly, stay informed. Keep an eye on the news and market indicators. A well-informed strategy can help you make better decisions about when to ride the bull run and when to step back. To sum up, a bull run is a period marked by rapid, sustained price increases driven by investor optimism, positive news, and strong market momentum. Whether it's the story of Bitcoin's meteoric rise in 2017, or a surge in stock prices on a great economic day, bull runs remind us that markets can be very emotional and sometimes unpredictable. If you found this explanation helpful, please hit that like button and subscribe for more simple, clear explanations of market terms to help you on your journey to crypto investment. Drop a comment with your thoughts or any questions you have about bull runs or other market trends. I'd love to hear from you. Thanks for watching. My name is Michael from the Money Blueprint, and I'll see you in the next video in the series.